Hey, good morning. I'm going to do a quick video lesson here on, well, the same thing I've been doing on for a while now, but a little bit different. So, again, we're going to be looking at support resistance off the daily and how to use it on intraday. Slightly different. I'm going to look at the Apple and Facebook trades from Friday and talk about this particular type of setup because this is a very, very, very particular type of setup. The big gap up on good news, and then the second or third day short of heavy resistance. Going forward, it's something I'm gonna be scanning for setups like this every night across the S&P 500, and when I see something that we get a second or third day potential resistance short, I'm going to be putting it out on a little watch list because I really, really like this type of setup. It's something that works really well, and if you can get your daily levels marked up, all you need to do is quite simply look for signs of weakness as it comes into these strong upper wick daily hive day levels. So in the case of Apple, first of all, a little thing first of all, I noticed if you've got it on your charts, but on my charts Apple is all screwed up for some reason. For some reason we had a dot marked down here after hours down at $105. You can see it's marked it down there, TC2000, which is bizarre, absolutely bizarre, and it screwed my chart up. So if you're a TC2000 user for sure and you find something like this, you find a rogue dot down there and it screws your chart up, what you need to do is you need to go into chart properties, post data, and take off show market data never, and that will correct your chart for you. The only thing you won't have is the post and pre-market, so you'll have to separate the days yourself. Easiest way to do that is simply to get that and just put it in there like that, and then we'll get another one, and we'll do that, and we'll get another one, and we'll do that. It's close enough. There we go. So that separates our days for us. Okay. Oh, look at this. We get the extra day now with on the 1 minute chart. That's sexy, huh? Okay. Put this here. There we go. So there we go. Easy peasy, Japanesey. So we're going to look at. Oh bugger. Hang on a second. Sorry. Okay, so I decided to take it off because I forgot they would. I can't be bothered drawing up new boards and everything, and obviously I'm working on the same board and it will show on one or the other. So anyway, you can do that if you want to, but we can manage without it. So what I really want to look at here is Apple on the daily. So we had this gap up on Apple, and we obviously, this was on Wednesday, this was Thursday's trading action, and into Friday we had a real definitive ceiling. Okay, and this was obviously from the pre-market plan of attack, but let's go through it again because this is how, I think the reason I really want to talk about this is because every single day we're talking about these daily levels, and there's so many people that still just for some reason aren't getting it. I talk to so many people when they're not doing this, they're not understanding it, they're not seeing what I'm seeing, and I don't think it's that hard to see. Well, I really know it's not hard to see. And this is all Patton and myself are talking about all the time, and the moderators too, is daily levels, daily levels, daily levels. So let's have a look how you should have marked up your daily chart on Apple for this particular day. Now what I do on my chart, I have a series of pre-coloured lines that I keep on every day, and I have a little system where I know that a certain coloured line represents the high of day, low of day, open, and the close. Okay, so coming into Friday morning, I would have had my chart like so. So my high, my low, which is the light blue. Okay, my close. Now the reason that one was coloured darker red is because the close there also represented the high of day there, so it was a more important line, so I put that slightly thicker red. Okay, and then of course I've got my yellow line, which would have represented my, you've got your open and you've got your close. Now zoom in and we can make sure we've got them right. That'll do. Okay, that's all close enough. I'm quite happy with that. Okay, now what we also need is we need to see, is there anything else? So no, we'll keep it nice and simple. So we've got open, close, high and low. Okay, because we've got a nice big definitive candle there. What you can also do, just in case, you can also make a note of this one here. If we start to drop below, you've also got this one, this level here to look at, which is we would put another yellow line in there. Okay, so if we start to drop down, we're starting to look at support levels. So I would have a line there. Okay, and well, if we do start dropping down again, we've got this. So these are kind of your main things that we're looking at this point there, and then obviously we've got the low of that candle, and that's it. Don't need anything else right now. All done. Okay, so that's our chart marked up going into Friday. Okay, what are we really looking for? We're looking for this. This is what we're looking for. We're looking for this area there to hold. Okay, that's our target, that's our goal. Okay, that's what we're looking for, a push into that area and to short off. So come Friday. Okay, there's our previous day. This is Friday. Okay, so market opens, we get the usual volatility, we get the push, we get the pullback, okay, and then we get the push, and it pushes straight into 169. Okay, 169 was actually the level we had marked up. You know, we said watch 169. The actual level was 169.04, but 169 is a nice whole number. So let's say you had 169 marked up. That's fine. Okay, that's what Pat said. Watch 169. So we get our push into 169. Look. Okay. Is it any surprise it pushes into 169? Now, does it fail because 169's a whole number? Well, no, because 168's a whole number, and it kind of didn't give too much of a stuff about that. 167 was a whole number, and it kind of said, well, I don't care about you either. Why is 169 the one that we were watching, not 168, not 167? Well, because 169 was the previous day's high. Okay, that's where it got to, and it couldn't go any higher. So obviously this is what we're going to watch the following day, the level that it rejected at. Okay, that's why 169 was the one we were watching. Now 169 it came into, it held, and it pushed back. Didn't give you the cleanest entry. We didn't get those nice topping doji candles that we often look for. It was a quick hello and goodbye. So what do? How do you take this trade on Apple? Well, if you're not aggressive as a trader, you may well not have taken that. Okay, you may well not be at the point where you just want to take it. If you don't trust your levels, that's fine. However, what we do get is this lower high. Okay, perfect. You can't get a better lower high than that. I mean, we got 11 cents risk. Okay, so if you're getting in here, you have a look at it, you decide here, yes, it is a lower high, you're getting in there, maybe 30 cents risk. Okay, nothing at all. You're risking off your whole number plus a little bit, aren't you? You're risking off 69.11, whatever. Okay, here is the lower high. Okay, so this is the trade that you want to be looking to take, little lower high. Okay, this is what we teach. This is the trick trades, strategies. The lower high, the high low, the double top, the double bottom. So you may not have got this. That's fine. Okay, you normally, when you get a push like this, you will normally get a retest. All right, it's just the way it works. It's a rejection, and then let's have another go. The lower high says we haven't got enough buyers here, where there just isn't enough to test that level again. It's failing. Okay, you have to take this setup. right, you have to take it. So you take the low high and then you ride the train down. Okay, you take a few off around VWAP. Okay, you've got your levels. Let's have a look at what levels might you have put in intraday. Okay, I shouldn't have to do this all the time, but you know, I'm gonna have to do it until everybody is doing this. Why is that level important? Because it came up here and it struggled, it came down here and it held, it's come back up here and it's now become resistance, support, resistance. Okay, so we should have had that level marked up. If you've doing mentoring sessions with me, you should know this. If you've done a shotgun session with me, you will certainly know about this, and you will never ever not do this again. Okay, your resistance became support, became resistance, became resistance. Okay, so if we did take some off here, we know we're going to hold it to there. It goes without saying. Okay, we're going to hold the position and see what it does here. It comes down. Okay, it fails. It comes back up. It tests this little area here. Okay, you can look. You might find something there, but it's not. I mean, here we're still going to give it to here. It's come back up, it's failed around the VWAP, and then you've got it back up, back down to the voodoo. You may take some more off there, and then we're holding the EMA 50, okay? You may have other areas marked up, look, okay? That little high there, you see? So, you would have put here, your high there, you see? Comes in, your first high of day becomes support. Resistance becomes support. There's resistance there. It's become support. Okay, so here we've got another area we can risk off. So now we're going to give it to there, and so on and so forth, all the way down. Okay, although we've got a voodoo line there, if you're using TOS and your voodoo line is wrong, which it probably is, you've still got this here. It's come down and it's tested this support area here. Okay, which is the whole number, which is great. We know it's a whole number. It held, it held, it held, and it's broken again. Okay, it's broken, now it's held. So many ways to use these levels, guys. Okay, it all spans from marking up this daily chart though, and marking it up right. Okay, trusting this level. Okay, if you marked up this day, you would have found during Thursday's price action that these levels were important, because they were. Okay, and it's the same on Friday. You mark up your daily levels, you keep it simple, your high of low, your high of day, your low of day, you open, you close, and then the previous day's levels, as long as they're in and around where we're at today. So it's very important to have the last couple of days highs, lows, opens and closes. That's it. You don't need anything else. You don't need fancy pivot points, you don't need fancy Fibonacci lines. I'm not saying you can't use them. Everyone's welcome to do whatever they want, but you don't need them. You very often find that when you mark up these levels and people talk about Fibonacci lines, you'll very often find that the fib lines are the same as what you've got marked up here anyway. The way I look at it is I think it's easier, more simplistic and less complicated to explain to someone how to mark up these levels than it is trying to explain to someone how to use Fibonacci lines, Fibonacci extensions, daily fib, retracement fib, gap up fib, gap down fib, fucking, I don't know, everything, have a drink at night fib, fucking eat your dinner fib. It's just me personally, but I just find this is so much easier. Just mark up your lines, go ahead and trade off your basic daily support and resistance, put in your intraday support resistance lines. No need to go into here and start drawing tools, because you're going to end up with 150, 200 lines all over your chart. You're not going to be able to see them very well. It's going to look crazy. This is more than enough lines. We can add more intraday, you see that one. But the difference is when you're putting them in yourself, when you're plotting them yourself, they mean a lot more to you than if you go into a Fibonacci tool and plot it and get lines everywhere. Because you've physically plotted it yourself, a little part of you remembers plotting it, and it makes more sense to you why you plotted it and what to expect. Like I keep saying to you guys, every time you make a new high point, as long as you get a decent pullback from that high, mark out the high, because it will have an effect later on. 168.14. No reason for that to have effect. It's a weird number. It doesn't mean anything. However, it worked. You see, it worked there, it worked there, it worked there. This is what you need to do. You need to mark your chart, which is why you need to focus, which is also why when I see people chatting away and gossiping in chat when we should be trading, I know that you're not doing the work you should be doing. Okay, there's a time for chatting and shooting the shit, and there's a time for focusing up, marking up your charts. And I was saying to Dave yesterday in our shotgun session that a lot of people aren't comfortable playing the front side. So just because you don't want to trade the front side, you couldn't get an entry, it's messy, it's dirty, it doesn't mean you should ignore it, because we have a plan for Aapl. The plan for Aapl is we're going to wait for it to push into this high, look for weakness, and we're going to short it to try and get the backside. So just because you're not trading the front side doesn't mean you shouldn't watch it and mark up levels, because the front side is putting in a blueprint for the backside, you know. And this is what I'm trying to get into people. You need to understand everything that happens on the front side is a roadmap, a blueprint for what to expect when you trade the backside. There's no need to get involved in this. It's difficult, it's hard, it's messy price action. However, once we get this lower high, we now know our levels, because the front side has told us what to look for. So all we have to do is trade it section by section by section by section by section. Each section is a different part of the trade, and this is how you need to look at it. Each section is now a well planned out, pre-booked part of the trade. It's told us what to look for on the back side, and this is how you need to look at it. Okay, guys. So that's Aapl from Friday. I know some of you got it. I missed Aapl. I was in SPY options at the time and Nvidia, I think, so I didn't take Aapl. But great trade for those that did take it. I mean, it was such a beautiful trade. Then we'll be looking for these. And we're looking for these chart patterns, and we're gonna find some and play them. Okay, onto Facebook. Very similar with Facebook. Okay, so let's look at the daily. What were we looking at Facebook? So ideally, Facebook exactly the same. Big gap up. Looking for some weakness. We got weakness. Ideally, so let's mark up the chart. How we're going to mark it up. So we've got our high of day, our low of day, our red line for our open and our close. Open, and the yellow for the close. Okay. Now we've also got the moving average 200 there. Okay, which put in there just so we can see where it is. I always put something in there so I can refer to it on the intraday, because we don't get, TC2000 doesn't plot for us. And that's basically what I was looking for. Okay, but also with Facebook, I was looking for something in the middle. I wasn't convinced Facebook was going to have enough to even push to this level, just because I don't believe in Facebook like I believe in Aapl. Aapl, I've got a feeling, will continue to push at some point, because it is a great company. However you look at it, they're a great company. I don't like their products personally, but they are a great company. They are a pile of cash. I think a lot of investors are going to feel that they're a really good investment for the future. Facebook, on the other hand, is a pure earnings gap up. Probably an overreaction to earnings based on the fact that the company is surrounded by bad publicity. So I think Facebook will come back down and fill this area here over the next week. That's what I'm looking for personally. Maybe I'm wrong, but that's what I'm looking for. I'm looking for these levels to break here, and then obviously some support and resistance areas, which I will draw up for a possible swing trade to the downside if we break this low here. However, what I also did was I was also looking for a possible point of resistance between here and here. Okay, and I identified this area here. Okay, around this area here. I just like the top of that candle, which was also the close of day here. So I thought somewhere around here looks pretty good for a possible point of Facebook. So that's all we needed for Facebook. Certainly, unless it broke those lows, then we can mark up some more levels. So going into the day, this was Facebook, and this is this is what we got. Okay, so Facebook ripped out of the gate. It came into this sort of area, it failed, it pulled back, okay, and it gave us this thing. Now I know Pat took the trade here on Facebook. It did give us this pop. However, you notice this pop to 1688 had you marked up the area on the daily chart that I've marked up there. From there, then the reason why it popped up to 1688 and rejected hard off it would be pretty obvious, because we had it marked up off our daily chart. Okay, yeah, it failed a bit there. If you are looking for a trade, remember we talk about the tweezer tops, okay, and we talk about this little descending pan of tweezer tops here. So if you are again a little bit more aggressive, you can take the trade here on these final tweezers, because we've got this descending ridge of tweezer tops. Failing that, we wait, we sit back, we wait for the 10, 10, 15, 10, 30 reversal. Again, we've got, if you ignore that little spike, we've got a nice downward run of, you know, of these tops. So it looked like, at one point it looked like it might hold and want to squeeze and push. It was simply a case of taking your position here, if that's what you wanted to do, and setting your stop correctly. And obviously there's only one place to set your stop on this trade, and that is above your high of day. You can't set it to 169 because you're not giving it a fair chance. So you set your stop there, you take your trade there, and you risk accordingly. Okay, yeah, it's a little bit more risk, so you size down so you're prepared to give it to down, you're happy with the loss if it works, if it happens. Okay, you take the trade. It is a higher low apart from this spike, but we're marked up, we know why it stopped there, we're not worried about that. Okay, we take the trade, and again, the rest is history. I don't want to go into this as a trade. I didn't take this trade myself. It is a messy looking chart, but still it gave you a beautiful opportunity to trade it from there down to here, down through these levels, taking off somewhere along here, wherever you wanted to. A really good trade, really good opportunity. But it all comes down to marking up the daily and knowing what to expect. It helps if you have oh, why is that repeatedly doing that? I have no idea. It helps if you have some, I don't know, an idea as to why. If you've got something in mind as to why you don't think Facebook will work, it helps, because knowing that Facebook isn't a good company anymore. Well, they kind of are, but there's so much filth around them. I just think when you get a big gap up like that, the chances are you're probably going to get that's it. You're probably going to get more of a sell. You're going to struggle to replicate yesterday's price action on something like this, because they're just not. I just don't believe in Facebook as much as I do in other companies, so that's why I was looking for some mid-range rejection, which we got there to the penny. Okay. Anyway, I hope that helps. I'm going to do another video lesson in a little while on some trades that we took over the last few days, Nvidia, SPY, stuff like that, but I wanted to keep this sort of under the half hour. But again, that's all I'm going to talk about in a lot of lessons, is support and resistance, daily and intraday, and how to use it and how it worked. Okay, because the reason I chose these is because I know that as a group of people we took the trades, but I need you to know why you took them. I don't want you to take them just because Pat's taking them, just because I'm taking them, just because Moses or Tex is taking them, just because Jerry or Nuke is taking them, you know, or Ant-Man. It's you don't do stuff just because moderators do it. You need to understand and know why they're doing it, and why we're doing it, and why you're doing it. Okay, you need to have your own knowledge as to why the trade's been taken. So hopefully these nice basic simple video lessons that I'm doing at the moment will start to drum into you how simple this really can be if you just follow these very, very basic simple rules of trading: support and resistance. Trust them, believe in them, and just take the damn trade. Okay, thanks guys. I will catch you in the next video lesson. Later, enjoy your weekend, bye.